Welcome to Drill Down Earnings. This is the latest results coming from Alphabet, the company we like to call Google. Stock ticker's GOOG, but it's Alphabet. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at 50 most important companies in technology. Could you make the argument that Google is the greatest business ever invented in the history of mankind? It's hard to not look at these results and think that. So the stock is not reacting a lot, but I want to take a look at what's going on here with Alphabet. Was it a beat or a miss? It was a beat. So what? That just means Wall Street analysts got it wrong. It's certainly better than my numbers. Just a really, really strong quarter for this company. So almost $100 billion in revenues, growing at 14% year over year, double-digit growth rates, and fantastically profitable. These are just unimaginable numbers for this company, $96.4 billion in the 13-week quarter. That was the second quarter of 2025. We look beyond that. The company's also more profitable than it's ever been before. So 33% profit margins, not as big as last quarter, but generally the trend has been up. This business was fantastic when it had 20% operating profit margins, and now it's at net income margins, now at 33%. Just fantastic. So what is the business? So Google, of course, has a lot of different businesses under the Alphabet umbrella. And Google search is still the biggest of those at 56% of revenues in the quarter. YouTube and YouTube ads, a really big business here at 10%. That's nearly $10 billion in quarterly revenues. The Google network, that business is kind of flat. And that's Google's ability to put the ads that Google sells out to other websites. I think it also just speaks to the dominance of the Google site as well. The subscriptions and devices business, 12% of revenues, 14% Google Cloud. That's the thing everyone's focusing on, so we're going to talk about that. But don't forget search. Search is cranking. 12% year-over-year growth in the search business. Just fantastic. And the YouTube business is growing. There's a great story in the Wall Street Journal, I think it was last week, about what's happening with podcasts. There's a piece in the New York Times at about the same time, talking about these video podcasts, things like this, like the Drill Down. And I suppose some are bigger, it's hard to believe, but some, yes, are even more important, not to me, but important to a lot of people. Those ads in YouTube ads, driven by the increase in video podcasts, which they're calling out at Alphabet at the company, drove that giant business nearly $10 billion in revenues in a quarter and 13% year-over-year growth. But the big focus here, Google Cloud. Well, there was focus on search too. We'll talk about that. But Google Cloud, that is their business, competing with Amazon Web Services, competing with Microsoft Azure, competing with data centers from Oracle and the like. 32% growth on what was a nascent business only a few years ago. That business has gone from just under $8 billion in quarterly revenue to nearly $14 billion in quarterly revenue. Fantastic growth, and a lot of commentary in the conference call about that. Nonetheless, stock up only 2% in after-hours trading. And indeed, for the year, for the 12 months, not everyone's talking about April lows. Sure, everything was on sale then, but 4% year-over-year growth, just not great. I look at the S&P 500 at 15% in the same time frame. 4% not great for this great company. They are also spending a lot of money on capital expenditures. They're spending money to make money, and there's talk about that in the conference call as well. In the last quarter, spending over $20 billion. $20 billion in the quarter, 31% more than the previous quarter. So they are going for it when it comes to AI and data centers spending. Just hard to imagine amounts of money. Here's what Sundar Pichai, the CEO of Alphabet, had to say about that spending.
We are investing more to expand, but there is obviously a time delay between, this additional investment will play out in future years, and so that's why both of them are true at the same time. But we are planning ahead and we are investing, and but overall, it's exciting to see the traction, particularly in cloud. I think the comprehensiveness of our AI portfolio, the breadth of our offerings, both providing our models on GPUs and TPUs for our customers, all of that has been really driving demand, and so we are investing to match up to it.
So look, they're already showing the demand, but spending a lot of money to make sure that they're there for lots more of that to come. But what's it all mean? What's your big drill on earnings takeaway? And the one number that tells us a whole lot? Well, Alphabet Q2 earnings, your essential summary tells you that the Google business under Alphabet was great, but Alphabet overall nearly $100 billion in revenues in 1 second quarter. This is incredible, $96.4 billion in the quarter and fantastically profitable, 14% year-over-year revenue growth. But the bite, the one number that tells you a whole lot about what's going on there at Alphabet is the Google Cloud. And that bite is $13.624 billion. That's how much revenue Google Cloud took in just the quarter. Yes, over $1 billion a week in the second quarter. Google Cloud business is showing fantastic growth. And there's presumably a lot more to come with the growth rates we're seeing there, as well as their CapEx spending to make that possible in the future. And thanks for checking out Drill Down Earnings. Check me out on X at Cory TV. Subscribe to us, please. We need your attention. I'm lonely. At Drill Down Pod on TikTok, on YouTube and Instagram at Drill Down Pod as well. We appreciate your time.